Alright guys, so I have some people asking me, what is a gap close reversal? So as far as the gap close reversal pattern is concerned, I'm going to keep it simple, I'm going to keep it quick, I'm going to keep it as stupid as possible, because when it comes to trading, I try to keep everything as simple as can be. I don't want to complicate it, I keep it as emotionless as I can, because when you're taking a lot of size, you don't want to have to be thinking of 18 different calculations to you know decide if this is the right trade or not. You want to think of the easiest calculations, the simple stuff, to decide if it's a good decision or not. So this is what I did on the daily chart. Forward was a gap from the 9 area on up. And it gapped up to 937. Well, look at that too. Wow, I didn't even notice that. But it gapped up to 937. Now, when you see a gap, generally, not always, but generally, gaps are going to fill themselves. So it's going to close in on itself eventually, and then it's going to decide what it wants to do. When a gap usually closes on itself, it has a reversal. That's why it's called the gap close reversal. So as we see the chart's doing whatever, we don't know how long this is going to take. So the chart's doing whatever, we're not watching it every single day. How we know when it does close, you simply set some alerts. You keep it simple, stupid. You right click, create alert. The alert box comes up. You could change this to whatever you need. I put at or below. You don't want it to be in the exact price. You want it to be a little bit off. That way you see the alert ahead of time. So if it's supposed to be like a 901 reversal, set it to like 907, 908, something like that. Just click create, and then you'll get an alert on the top part of your screen right here, or wherever yours is set up, basically, when it hits your criteria and when the alert goes off. So that's what happened. My alert went off on this day, and I didn't see any confirmations this day to buy and go long. This was the 16th? Yeah, this was a Friday, and then Monday. So I didn't see confirmations to go long. Now, I did see confirmations on the 19th, which was Monday. So let's do this. Let's go back in time, shall we? Oh, whoops. I need 5 days, I think. Yep, perfect. That's about what my chart looks like in the morning. Yeah, it looks about like that. This is pretty much what my chart looks like in the morning. So, I knew there was a double bottom, or I knew that there was a gap close reversal chance. So I'm looking at this. I'm like, all right, this price level is big. This 899, this 98, this 9 area. This is a big, big, big area. So I'm watching the intraday chart, looking to see what it plans to do. Now, at the open, yes, there's a sell-off. That happens a lot. You don't really need to worry too much. You just get an idea based on this. The chart sells off. Comes up, tests VWAP, you see a double bottom. Now, what's a double bottom? A double bottom is a bullish pattern. Okay, we see that. Now, in the back of our head, we already also know that it's a gap close reversal on the daily patterns as well. Boom, 2 criteria right away. My head's like, get in, buy, go long. Now, what do you risk? You want to risk slightly below, not a penny, maybe like 2 or 3 cents below the low of day. You never risk a penny below, because you're going to get stopped out majority of the time, because algos and HFTs and the computers are going to see, market makers are going to see you be a penny below, hit that penny below, and then shoot right back up. So you got to have a stop that's down, 9.3, maybe 9.4, preferably like 9.3 area. That's where you should safely, honestly, put your stop at. So I got in at 9.9, wrote it up. I sold some at 9.14. Where's 9.14? Because I went off to the gym when I saw this. I was like, be patient with it, let it do its thing. Yeah, I sold some at 9.14. Yeah, there we go. That's why the 9 crossed the 20. And I was like, screw it, sold some, and I sold the rest. I held some. I sold the rest at what I thought was going to be a double top at 920. Because then it came down. I was thinking it was going to go higher. I think it would go a lot higher, actually. I wanted to sell at 928, 925 area. Didn't get that high. So I sold at what could have been a double top. I sold the rest. I want to say it was like half at 920 here. So I did sell 2 partials. But it was a good trade. You know, you put in, if you have a lot of shares, you get a lot of money out of that. I think it went in with about like 10,000 shares. So that's what I do. You know, I take big size, and that's just part of trading. You got to be able to handle the emotions of it. But that is the gap close reversal right here. This is the gap. Chart fluctuates. Again, we don't know how long it's going to take, but once it does close it, it's going to reverse usually. These are all usually. This is all just based on, you know, averages, what generally happens. Because that's how you trade. You trade based on what generally happens. You know, if you're doing what's majority of the time going to happen, you put the best percentage odds in your favor, then you're going to win long run, in the long term. You set the risk management properly. You play the patterns that have the highest percentage chance, and you're going to win. That's where people fail, is because they get FOMO, they get, emotional, they just get greedy too. They take too much size for what they're comfortable with, and then just bad things happen. They're not patient enough. But yeah, that's my pattern. That's my gap close reversal. Yeah, so you can see this on the daily chart. You can see this on the intraday chart, on like a 1 minute chart, a 5 minute chart. It's kind of hard on a 5 minute chart. You see it on a 1 minute chart though. But yeah, that's how you play it. If you have any questions, let me know. Feel free to comment in the chat and I'll answer any questions. Talk to you soon, guys.